Hallo und herzlich willkommen. Hier lernst du alles rund um das Thema Investor Relations, Fundraising und Kapitalmarkt. Mein Name ist Julia Stötzl und ich bin Gründerin und CEO von Investor Relations Beratung Unicorn. Unicorn ist auf einer Mission, Investor Relations für die nächste Generation einzuführen. Das bedeutet ganz konkret die Integration von digitalen Medien wie zum Beispiel LinkedIn, Podcast, Newsletter in die klassische Kapitalmarktarbeit. Mehr Informationen zu Unicorn, aber auch zum Podcast findest du unter unicornconsulting.com. Und jetzt wünsche ich euch viel Spaß beim Zuhören.
So in today's episode we have Gauthier Roseau with us from Amundsen Investment Management, which is actually I met Gauthier twice I think when I was working with Deliver Hero and also when I was working at About You. So very great to have you back to the show.
Thank you, Julia.
Just a very brief background on you, and then you can introduce yourself to the audience as well as part of this theme, which is today IPOs and sustainability, the investor's point of view. So Gauthier is a co-founder and CIO at Amundsen Investment Management, and prior to that he was a senior portfolio manager equities at Norges. So welcome to the show, Gauthier, and we will start now with the first question. What does the audience need to know about you and also your company that you're representing, Amundsen, to give frame to today's conversation about public markets and sustainability?
Yeah, thank you, Julia, and thank you, Caroline, for having me. As you said, Julia, I'm the CIO of Amundsen Investment Management, which is a European-based equity fund. We invest in public equities. I started Amundsen 3 years ago with my partner Per Einar Ellefsen. Before that, both of us were at the Norwegian oil fund. I've been working there for over 10 years as a portfolio manager investing in global equities. We have set up Amundsen with offices in Paris and Oslo. And the expertise of Amundsen, if you want, is to invest in capital market transactions. So in the context of IPOs, capital raise, sell down by minority shareholders. So we engage a lot with companies considering coming to the market. We invest across all sectors and as I said, globally. When it comes to sustainability, we don't market sustainable funds, but we take ESG considerations very seriously in our research investment process. And as I said, because we engage a lot with companies when they come to the market, we often have very intense ESG discussions and considerations with those companies at the time of the capital market event. So it's very important to our investment philosophy.
It's very interesting. I always bother Julia about this topic. It's been one of my interests in the last couple of years. So really happy to have this conversation with you and learn more about it. Maybe would you like to give our listeners some more info about Amundsen and what's the firm's investment policy and values? From my understanding, this is quite a core also to your choices when you go about.
Yeah, as I said, it's I think it's part of our value. And again, given where we've been from before setting up Amundsen, spending 10 years at the Norwegian oil fund, who I think is one of the best in class when it comes to ESG and sustainability. We de facto learn to include those considerations in investment process without being an ESG fund specifically, as I said. So it's something we took part in our risk assessment more than anything else, right? And that's what we have today. This is how we implement those considerations. I think the philosophy again around sustainability and ESG for us at Amundsen is that I was always a bit surprised that a lot of funds put forward ESG, but at the end of the day, a lot of those public funds will be buying and selling shares in the market without really having a direct impact, if you want, because at the end of the day, you're just exchanging paper, right? But what we liked about our positioning at Amundsen is because we engage with companies in context of IPOs, or capital market transaction, you actually have somehow an impact because you can share that feedback, which matters at this point in time for the company. So we think actually it's a bit more impactful, and again that's what we're pushing forward. But again, we're not making ESG recommendations, and we don't market ESG funds.
Got it. That's a perfect transition to our next question, actually. So, what would you say is driving the importance of sustainability within investment decisions, specifically as part of the IPO? So maybe you can give some context to our audience, specifically for IPO companies.
Yeah, no, I mean, sustainability, I think, it's important to our investment process, and it's always been there. As I said, I think it's getting more and more important. We invest for the long term, and I think companies coming to the market, they need to show they have those practices in place if they want to be successful long term. Company, and I think this is regardless of regulation in the world, but you have to think about the quality of your business model and how sustainable it is, right? And that's in context of IPOs obviously, but not only. But I think in terms of the IPO process, it's becoming more and more an important topic for sure. The challenge, to be fair, is that IPOs are already quite challenging to execute more and more because the world is investors are being a bit more passive, although the active investors really start to be, kind of a very scarce community. And what we saw in IPOs, not only is a chance to do your IPOs in normal times and gather interest from public investors, but now if on top of that there's ESG considerations, then your actual audience is quite limited, right? Because there is you need to rely on good ESG disclosure. ESG information is not always there, right? So I think it's the ESG consideration for IPOs will be more and more important, because if you want to be able to IPO, you need to engage the broader audience by definition of investors, and that means there is no way, but you'll have to be very strong on this disclosure from an ESG perspective. Otherwise, you're going to lose and miss on a lot of investors, right? So it will be more important. I think some depends on the region, but Europe obviously I think is leading the way, and I can see that investors are more sensitive to those topics in Europe, but also because the end consumers, right? You and I are probably a bit more sensitive. If you think about it, companies, us as consumers, we're also the savers, putting our money at work, and this is where the money and the inflows are coming, right, from. And I think this is why us as investors and savers, we expect more ESG investment with sustainability impact. But as consumers as well, we expect companies also to deliver on those topics, right? So, for sure, it's getting more and more important.
Absolutely. I see it on the day to day, like I think a few years ago when we would try to engage with investors on ESG topics, they would be listening, but not particularly active in the conversation. But yeah, you can tell that this is changing. But in general, how do you think that this topic will evolve over time? I mean, you have the two sides. You have, as you said, disclosure with the new directives from Europe coming in. The companies don't really have a choice. You really have to step up to the new expectations, and that's pretty huge. Like I'm currently working on that topic now, and it's going to be something to tackle. But on the other side, the investors also, as you say, have to get more engaged and get more interested and learn more about it, integrate it in their investment process and their risk assessments. So what do you expect it to look like in the next couple of years?
Yeah, listen, it's changing fast. The reality is that ESG investing and sustainability within an investment process in public equities is still very much at its infancy, the asset flows, as I said, will continue. There will be more and more inflows looking for those opportunities. So the importance of that will grow, right? And as I say, it's a global phenomenon. Some regional differences. You mentioned Europe, this regulation and EU taxonomy is a good example, is coming into force this year in 2023, right? And there's a need of that, obviously, to define what is sustainable, right? But I believe that this definition will evolve, and everyone is basically free as well to define what they think is having a positive impact or not, right? At the end of the day, it's like, your cost of capital as an investor is very much different for everyone, right? So it's not like there's a perfect valuation. It really depends on your opportunity cost. I think it would be the same for ESG. It's going to be relative definition, but the overall conscientiousness and the need to offer some sort of well-defined investment proposition, I think that need will just increase, right? What consumers want will evolve, but that will push, obviously, the need to have better defined investment process, better defined risk process, risk assessment, complying with everyone's own ESG and sustainability definition, right?
Yeah, absolutely. No, it's very interesting to hear that from an investor point of view. You said at the beginning that you are specifically focusing on new listings, so IPOs essentially. And we always try to give our audience a bit of practical tips at hand. So maybe you can give some insights into what do you expect to see from a company when you take an investment decision as part of an IPO process, generally speaking, but also specifically with regards to sustainability and ESG. Is there like a checklist that you're running through, or how do you go about what you want to see in order to take an investment decision?
Yeah, no, listen, that's a good question. I mean, ideally, I think, us as investors, we like to see from IPOs candidate the same type of disclosure than you will see, you will get from existing listed companies from the ESG perspective, environmental, social, and governance, right? The exact checklist or data points, to be fair, I mean, it really depends sector by sector, activity by activity. So this materiality matrix will really much differentiate from every businesses, right? So usually what we do, when we see private companies considering potentially a listing, we're going to check for information already available. I mean, very few companies issue their sustainability report before IPO, but we see a trend of that happening more and more. So to be fair, that's something that can be done and that we track and we're looking for. But otherwise, you're always going to be looking at who are the best in class peer in a specific sector, what they're reporting, how they're committing to their sustainability policies, how they differentiate themselves, and we're going to evaluate these private companies considering an IPO vis-a-vis some of those best in class in their industries, right? So I think that's something we're doing. That's something those companies can also think about and do, evaluating themselves versus some of the best in class out there, right? I think the trend hopefully is actually improving and helping those companies, because we see more and more of those ESG ratings or sustainability ratings based on, as I said, pre-IPO reports, and that's something we see more and more. Also, the brokers, the banks, and the sales side now start to integrate in their pre-IPO research, proper good ESG research as well. So that's something which is also, I think good and helping those companies to think about it, right? But there's also something we're seeing is depending of who owns you as a private company, you can leverage on those relationships. We see some private equity funds very much at the forefront of those considerations and very much investing into it, and or family-owned businesses where this is very important matters for the owners. So I think engaging with your existing shareholders, private shareholders, before the IPO on those matters are very important.
Yeah, absolutely. They, to an extent, they're even supporting you in this process. They'll give you advice. They have tools that they can share with their invested companies. They can really play an important role.
They can, and again, we see that today it's very different. Stage and level of maturity about those considerations for those private companies, depending again of your current owners and how important it is for them. But again, no checklist. It's just really case by case. Yeah.
Maybe I can pick your brain a bit more. Like something that I'm a bit curious about. I mean, if you break down the E, the S, and the G, like when you frame it in, okay, like you're the investor, you're looking at what can make your company more future-proof. That's a bit what you're looking at in this process. do you give a certain importance to one of the letters more than the other? Or is there something that you find, I mean, we've noticed, for example, governance growing of importance, but I don't know, what's your take?
No, I mean, to be fair, it's again, it will depend, but the governance has, I think, been there for a long time, at least in the context of IPOs, because governance is always key in an IPO discussion. Who are your current owners? How is your board? How independent is your board? How are you incentivized? All those always been very traditional question in the context of IPOs, which tend to be well covered, because always been a point of focus as you change your ownership model. Governance change with it, right? I think S been a bit more of a new thing, and here the level of disclosure and it is not the same. Really depends again of the business activity and the type of industry you operate in. I mean, some sectors is very important and it's underappreciated. In some sectors, it's not that relevant, to be fair. I mean, are you labor intensive? What type of activities do you have? Do you operate mines or not? Or are you a pure B2B business? Are you financials, a bank versus a retail? It really depends, and you wouldn't look at the S the same way, right? I think the E is clearly more the element which is obviously usually the focus out of the three letters, because this is where you're going to measure obviously and the environmental impact of those businesses and to sustainability over time of the business model from a energy and carbon footprint, right? And that's where the EU taxonomy we discussed, I think will help. This is where we need to be more regulation maybe, or we need to be more rule-based analysis in terms of how to measure the impacts on these fronts, because it can be pretty complex as well. But this is where we spend a bit more time on our side, because as I said, it's a bit more of a newer topic.
Yeah, absolutely. It's more measurable, it's more tangible. It's gonna be, I think one thing that I think will be tricky going forward, it's this balance between, with all the new regulations and then all the new disclosures that are gonna become requirements for the company. So on one side, also an additional burden, then it will lose focus to the strategic side. Like, what are you really trying to achieve on top of disclosing?
I totally agree, but I think and there's already a lot of, especially for public companies, a lot of additional disclosure and requirements coming on top of everything else, right? But I would guess at the end of the day, those are very important questions for you own. The on business model and sustainability of your business model, right? When you look at your consumers, where what consumers eventually want, right? And I think you have to address that point. What obviously us as investors, we provide more the financing part of the equation, how to fund this business, right? And that's very important, right? Obviously, because you need a viable product, but you need a viable balance sheet and a way to fund your product and your growth, right? And it's true that it's cumbersome, but at the same time, it's gonna help you as well to fundraise and potentially even at the lower cost of capital, or with a bit more duration of capital or quality of capital. So at the end of the day, it's probably very important anyway to the business in the first place.
Yeah, absolutely. Let's maybe talk a little bit more about your ESG policy as a fund, and how this is driving your investment decision at the end of the day. Is this actually also being a deal breaker if certain criteria of your investment decision or your investment policy are not met? Could this be a deal breaker for you to invest or not?
Yeah, no, I mean, obviously it can be a deal breaker. I mean, at the end of the day, again, as I said, we look at ESG more from a risk assessment point of view, right? I think we're not marketing ESG funds, but we think this is important to make sure that there's no red flags, nothing we're really not comfortable with or go against what we think an industry or sector should tend towards to, right? We want to see ambitious goals, ambitions in terms of the decarbonization, net zero emission targets. Again, very much focusing on the E here, but as I said, the S and the G will be also something we look at, right? So for us, it's because we invest in the long term. It's very important that those things are ticked as part of the risk assessment initially. If there's a lack of information, I don't think it will be a deal breaker, but we will again engage with the company to give that feedback and try to make sure they can, match best-in-class competitors and peers in terms of disclosure and quality of information. We'll follow up with the company on that, right? So we give that direct feedback to the management. That's really part of our process, where we evaluate the quality of the disclosure, the level of ambitions they have in the targets, and we try to communicate to the management what we will expect. In terms of deal breaks, there's some sectors we don't invest in. I mean, for example, we follow the list of exclusions set by Norges Bank. So that there will be some very specific type of activity where we don't want to invest. We see the risk too high, or we think those are wrong businesses, right? But otherwise, we try to have more of a productive and proactive and positive approach, where we try just to give more feedback and help the companies being better, to be honest.
Yeah, that's also what I kind of experienced on the IR side. If there was some lack or some gaps, right, usually investors would engage, but they would also say, this is something you need to look at for us to continue to be able to invest and hold that position. I've seen that in the past, actually.
Yeah, I mean, yesterday again, I think this company was raising funds. They're asking us to be part of this capital raise. It's energy transition related company. They really invest in energy transition. But and then we had a discussion on the governance side. The board was not totally independent. Part of the board was actually a very close rated partner to the founder, right? And we like the case a lot, but we think as you're getting more institutional, you're raising funds, you're going to the market, you need to be a bit more independent, obviously, and have this institutional profile, right? And I can think as well a real estate company which we're looking to IPO, and you would think real estate shouldn't be a red flag, but again, I think this company was really much lacking in terms of their targets and ambitions for decarbonization and how they're building and developing their portfolio, and we thought that they could do much better, and we're engaging at this point, and we're helping them to rethink about their commitments, because we think this is how they can maximize the audience of investors participating around this capital market transactions.
That's really, I mean, it's I find it like the good way to go about it, because at the same time, as you say, you're driving a positive change, and you're not excluding positive developments in the future that could happen. And when you look at this positive disclosure, even B Corps or good ESG ratings, what do you say? I mean, I've seen research about this that seems to prove that there is a correlation, but this positive information on sustainability, from your point of view, from your day-to-day activity, has it really had a direct effect on cost of capital and enable better deals for historical shareholders?
Yeah, listen, that's a really good question. And to be fair, this question on cost of capital, ideally you will have some proper research to back this up. So I'm not gonna pretend it has or it doesn't. And I think that was always put forward as an argument from some of those ESG funds, saying, if a company is really best in class, eventually people want to own it and cost of capital will come down. And I think I understand the argument. But when it comes to the transaction itself, at the time of the company coming to the market, doing an IPO or raising funds, right? Here, obviously, it will have an impact. Maybe not so much on the valuation, the price the market want to pay at this point in time, but it's gonna have more impact on the audience and the crowds that can participate by just not losing on these investors who cannot participate for obvious reasons. I think investors in type of transaction, the price will be driven by quality of the business and how much upside they see in the long term, right? But the ESG funds, as I said, don't really participate in IPOs, right? So I don't think that you will have them giving you that higher price potentially. but it's important for not losing, I say, other investors where they might have some exclusion or red flags, right? So it's I guess we need to see the data. I think it's important again to maximize the success of your transaction. In terms of valuation and cost of capital, I think it has more of an impact longer term as you get more passive funds, more ESG funds. When you done your IPO, you're listed for 2-3 years. Then if you match those, you mentioned B Corp and ESG ratings, then obviously you have this passive money coming over time, and that's for sure is going to help you. But around the transaction, it's I don't think it's critical yet.
Yeah, I was working quite some time ago in DCM and debt capital markets. There was also the introduction of green bonds at the time. There was also always already back then the discussion if a green bond is actually priced tighter at the tighter spread versus the equivalent that was not green. So that discussion has been around for some time already. Well, we know actually, we didn't say in the introduction, but you actually have your own podcast. I think it's called IPO Bell, right?
Yeah, IPO Stories.
Yeah, cool. IPO Stories, sorry, yeah, not IPO Bell, I think it's a different one. But from your experience, obviously, as an investor and also the people that you're interviewing, can you give our audience just a few practical tips at hand that they can use, in preparation of an IPO, everything that you gathered from your conversations as well?
Yeah, and that's thanks for asking, because I think that's this is where we can help and make a difference and all work together. I think that the best tip would be to start thinking now about this, about ESG policies and disclosure, and how sustainable are you as an investment proposition. And that's irrespective, I think, of your IPO plans, because as we discussed, it's probably very core to you for your business and stability of the business. And if you think IPO has to be the next chapter for your company, then you're ready, because as we say, there's a lot of already cumbersome administrative and cost imposed on you to be ready for an IPO, and getting your financials ready is already seems a challenge for a lot of those companies. Thinking about your board and governance, so if you start as early as possible, it's probably the best tip we can give you. And I think that means about thinking about okay, what's your materiality metrics, right? Which sectors you operate, what industries, what are your peers doing, and what are the KPIs that you need to start measuring and indicating. What can you commit on those KPIs, right? I think that's really the things you can start doing now. And then obviously when you understand your materiality impact and the indicators which will be important for the market and which are important for your competitors, is start thinking what are the changes you can start implementing to actually show a trajectory that you will be able to commit again, because that's what the market would like to see, and the level of commitments that the market also would like to measure over time. So that's really much basically what we give as tips ahead of the IPO, and that can be as early as possible, to be fair, right? There's no timeline for that. It takes time, so the better, the sooner the better.
Okay, makes sense. And I can confirm from what I've seen these days, especially now when these processes take even longer than they did back in 2020, you have to start doing this exercise quite a bit in advance, and double check, also get a sense from the outside world. Is this the right direction? Is this what they want to hear and want to know about your company?
Yeah, and use your board. I mean, more and more, and again, back to the question initially on governance, a couple of years, we were not really necessarily expecting any, ESG committee at the board level, but more and more we expect that, right? And you can already start thinking about it today and appointing the right person with the right responsibilities and leadership internally to help you driving this, right?
That's true. They really can play this role, and they're technically there for that also, so might as well make good use of their position and time. I mean, it's crazy. Our podcast time is already over. It went by so fast.
Quick. Yes.
Yeah. Thank you, Gauthier. I don't know if there's a few last words that you want to add before we close for today.
No, listen, thank you very much for having me, and I think those are all very good, important questions. Not sure if everything said was 100% clear, but we're more than happy to interact with some of those, private companies thinking about IPOing and sharing our experience and tips as well. I think it's by experience, management are not really well prepared for IPOs because by definition, they just do it once, maybe twice at best. So it's always new. There's a lot of advisors around you, but for a lot of different topics, and sometimes it can be overwhelming. So talking to actual investors can help, and we're more than happy to do it as well. So as early as possible, we find.
Yeah, maybe that was the last. So as early as possible is your timing, I would say.
Yes, always, because you don't control the timing, so don't push too much, too late. So,
Perfect. Well,
and there's an element as well. You don't control the markets, and you don't control the market timing as well, right? So, sometimes you will see people will tell you have to go now because the market window is open, right? But you can only do that if everything else is ready, right?
Absolutely. Whatever you can control, you should control as soon as possible. Yeah.
Exactly.
Well, listen, thank you so much for your time, for the insights. It was very helpful for our audience as well, we hope. And we'll see each other around. And if anyone is interested for more good content on IPO, listen into the Amundsen podcast as well.
Thank you. Thank you, Caroline. Thank you, Julia. Have a good day.
Bye-bye.
Thanks.
So, wir sind jetzt auch schon wieder am Ende des Podcasts angekommen. Ich hoffe, dir hat diese Episode gefallen. Wenn du Hilfe brauchst bei irgendwelchen Kapitalmarktthemen oder digitalen Investor Relations Themen, dann melde dich gerne unter unicornconsulting.com und buch dir einen ersten freien Consulting Call. Wir würden uns ebenfalls darüber freuen, wenn du uns auf Social Media folgst, zum Beispiel YouTube, TikTok, Instagram oder auch LinkedIn, oder wenn du einfach einen Like da lässt. Ich wünsche euch alles Gute und bis zum nächsten Mal. Eure Julia. Ciao.